Hey, something absolutely crazy happened on the crypto market last week. Pepe, the most prominent meme coin, just recovered 84% in just a few weeks. This is not small money. This is one of the biggest stories in crypto right now at the beginning of 2026. When I say Pepe, I'm talking about a meme token with the main character, the famous Pepe the Frog. This is not a serious project. It doesn't have real technology like Render Network. This is pure speculation and social hype. But here's what's interesting. People are betting big money on it. And sometimes these bets pay off. On this video, I'm breaking down what happened to Pepe in December 2025 and January 2026, why the price jumped 84% in just 1 week. Is it realistic to reach a $69 billion market cap? What serious risks are hiding under the hype? Honest advice for beginners. The story of Pepe, from bottom to top. Let's start with the history. Pepe was created in April 2023 as a meme token. This means it wasn't created to solve any problem. It was just someone who created a token with a famous internet meme and released it into the crypto world. But here's what happened next. In just 1 month, literally 1 month, Pepe reached a market cap of $1 billion. People went absolutely crazy. It was real hysteria. Everyone was talking about Pepe. Then in December 2024, Pepe hit its all-time high price. The market cap reached $11 billion. This was the most expensive Pepe had ever been in its entire history. Pepe was in the top 30 cryptocurrencies by market cap. This was enormous success for a meme token. But then, as always happens in crypto, a correction came. And not a small one. A very strong correction. Throughout all of 2025, the price kept falling. Falling, and falling. Day after day, week after week, month after month. By the end of December, Pepe had fallen 79% from its peak. Imagine this. If you bought Pepe in December 2024 and invested $10,000, by the end of December 2025, that would only be $2,500, a loss of $7,500. The market cap fell below $200 million. People lost almost everything. The Pepe forum was full of desperate investors. They were begging each other to hold or praying for a recovery. And then, at the end of December 2025 and beginning of January 2026, something absolutely unexpected happened. The price suddenly started going up, slowly at first, then faster, then very fast, then exponentially. In just 1 week, 1 week, Pepe more than doubled. This was an 85% recovery. On some days, the gains were 26, 30, even 35% in a single day. If you put in $100 at the bottom in late December, in early January, that was $185. An 85% profit in 1 week. People who lost money in 2025 suddenly got hope. People who were waiting for recovery suddenly saw it starting. People who thought Pepe was dead suddenly saw it come back to life. What caused this pump? Now here's the interesting part. Why did this happen? What lit this fire? Reason number 1. A tweet from an influencer. Seriously, one tweet changed everything. A famous crypto trader named James Wynn posted on Twitter, "We ride at dawn." This was at the end of December. And then he predicted that Pepe could reach a market cap of $69 billion. This guy has hundreds of thousands of followers. When an influencer like this says something about a coin, people listen. And people bought. Many people bought based on this prediction. Because 69 billion is more than Ethereum's market cap was at certain times. It sounds like fantasy, but in the crypto world, people believe in fantasy. Reason number 2, short liquidations. When the price started going up, something interesting happened. People who were betting on Pepe falling, they were forced to close their positions. They were forced to buy. Because if they didn't sell, they'd lose all their money. And when all these people started buying at the same time, it created massive buying pressure. It's like a wave. One wave creates another wave. Waves create tsunamis. On just one day, January 2nd, shorts worth $2.65 million were liquidated. That was the biggest liquidation day of the entire year. People lost millions because they bet on the price falling. Reason number 3, technical recovery. This is very important. When an asset falls 79%, it enters a state called oversold. This means the price fell too much, too fast. Under these conditions, a technical recovery of 50 or 80% is normal. It's even expected. It's just the market recovering from panic. People who understand technical analysis knew recovery was likely, so they started buying because they know you should buy when the market is oversold. Reason number 4, meme token season. After a long bear market in 2025, investors started looking for new opportunities. They already had safe coins like Bitcoin and Ethereum. Now they wanted risky assets. Meme tokens are the riskiest thing out there, but they can also grow 10x in a month or 100x in a year. That's why all meme tokens went up in early January. Doge went up, SHIB went up, Bonk went up, and Pepe went up the most. The numbers that shock. Let's look at some numbers that are hard to say. Current Pepe market cap, $2.9 billion. This means the total value of all Pepe tokens in the world is $2.9 billion. For comparison, Bitcoin's market cap is about $1 trillion. Ethereum's market cap is about 200 billion. So, Pepe, even though it went up a lot, is still much smaller than the major cryptocurrencies. 24-hour trading volume, $1.39 billion. This is huge trading volume. It means people are actively trading Pepe. In one day, people trade almost half the market cap. This is very high volatility. Open interest on futures, $470 million. This means people are betting big money with borrowed funds. They're using credit and leverage. This is very risky. Why is this risky? Because if the price falls even 10%, many people will get liquidated. They'll lose everything because they borrowed money. Recovery in 2 weeks, 85%. This is one of the biggest recoveries I've ever seen. In 2 weeks, the coin more than doubled. This is not typical. This is extreme. Whales are selling 2.86 trillion tokens. But there's a problem. People who track blockchain data saw that large holders, whales, started selling Pepe during the recovery. The whales sold approximately 2.86 trillion tokens for $20 million. This means the whales are taking profits. They know the recovery might not be stable. They know the price could fall. What could happen next? Listen, I'm not going to give you exact price predictions because nobody can predict the future. Nobody, not even analysts with 20 years of experience. Pepe is not investing. This is speculation. And speculation is movement based on emotions and hype, not logic. But I can tell you about 3 possible scenarios. Scenario 1, continued growth. Some people think Pepe will keep going up through 2026. Why? The bear market of 2025 is over. Meme tokens are fashionable again. Influencers are talking about it. People want risky assets. If Pepe keeps growing, the market cap could reach $5 to $8 billion. That's 2 to 3x from current levels. Not bad growth for a year. The chance of this scenario, about 40 to 50%. Like flipping a coin. Scenario 2, correction and sideways market. Other people think the price already went up too fast, that a correction is needed. Why? People are taking profits. Whales already are. Too many people betting on up. After such fast growth, there's always a fall. There's no real technology behind this. If this happens, Pepe falls 40 to 60% from the peak. The market cap could fall to 1 to 1.5 billion. Then it stabilizes and might slowly grow. The chance of this scenario, about 35 to 40%. Scenario 3, complete collapse. The third option is that Pepe just dies. The meme ends, people lose interest, money leaves. This has happened to many meme tokens before. If this happens, Pepe could fall below 100 million market cap. That's a loss of 95 to 97%, almost total loss for people who bought at the peak. The chance of this scenario, about 10 to 20%. History of other meme tokens. Let's look at what happened to other meme tokens. Maybe it teaches us something. Dogecoin, top story. Dogecoin was created in 2013 as a joke. Over 10 years, the market cap grew to $50 billion. Very successful, but the maximum price was even higher. One coin reached 74 cents at the peak. This was in 2021. But then the price fell very hard. Now Doge trades at 30 cents per coin. What does this mean? People who bought Doge at 74 cents lost 60%. They waited 2 years and lost half their money. Shiba Inu, another example. Shiba Inu was created in 2020. In just a few years, the market cap reached $13 billion. Very nice for a meme token. The maximum price was at 10 cents per coin. Now SHIB trades at 1 cent per coin. People who bought at the peak lost 90% of their money. The conclusion. The conclusion is simple. Meme tokens can grow to billions of dollars. That's true. But they can also fall 90 or 95%. And people who buy at the peak lose almost everything. Red flags and risks. Red flag number 1. Futures market imbalance. People trading futures are betting big money that Pepe will go up. Long positions, bets on up. Total $218 million. Short positions, bets on down, only total $106 million. This means almost twice as many people are betting on up. When that many people bet in one direction, the market often moves the other way. If the price falls even 10%, all these long positions will get liquidated. People will lose all their money because of borrowed funds. Red flag number 2. Whales are selling. We already know that big Pepe holders started selling. They're taking profits. They see the price is high enough to exit. If whales sell more, the price could drop fast because there aren't enough buyers to absorb that volume. Red flag number 3. Social hype. Pepe exists entirely on social hype. It has no technology, no real function, no partnerships, just memes on Twitter. If James Wynn or other influencers stop talking about Pepe, the hype could end very fast. And when hype ends, the price falls. Fast and hard. Red flag number 4. Dead cat bounce. This is a technical phenomenon that happens constantly. After falling 79%, a jump of 85% looks like recovery. But it might just be a dead cat bounce. A dead cat bounce is when a fall in price bounces back up quickly, but then falls even deeper. It's a trap for beginners who buy thinking it's cheap. Red flag number 5, losing money. The biggest risk is losing money. Losing everything. This can happen. Really. Actually, it's not a joke. If you put $1,000 into Pepe at the peak, it could fall to $50. That's a 95% loss. Honest advice for beginners. Listen, if you're new to crypto, here's what I'll tell you honestly. Pepe is not investing. This is gambling. This is speculation on pure emotions. If you want to invest, buy Bitcoin or Ethereum. Those are serious projects with real technology. If you want to speculate on Pepe, here's what you need to do. Rule number 1. Invest only what you can afford to lose. This means if you lose all the money, your life doesn't change. You can still pay bills, feed your family, live normally. If you have doubts, don't buy. Rule number 2. Don't use borrowed money. Don't use credit. Don't use margin. Don't use leveraged futures. This kills people. Literally kills them. If you borrow and the price falls 20%, you lose 100%. Rule number 3, have an exit plan. Before you buy Pepe, decide before buying. When will you sell? At what profit level? At what loss level? If you don't know, don't buy. Rule number 4, don't listen to the noise. Don't listen to what people say on Twitter. Don't listen to what people say on Discord. Listen to your brain. Only your brain. Rule number 5, diversification. If you buy Pepe, it should be a small part of your portfolio. Maximum 2 to 5%. The rest in safer assets. Final thought. Pepe is an interesting story about speculation, social hype, and market psychology. It shows how fast money can move in the crypto world. A recovery of 85% in 2 weeks is impressive. Very impressive. But it doesn't mean the trend will continue. Actually, history teaches us that after such extreme recoveries, there's often a brutal correction. If you want to bet on Pepe, that's your decision. I won't recommend it. But I will tell you the truth. This is a risk. A big risk. Thank you for watching.